Toyota is in some hot water, and it's for something that's really, really shady. You see, last week, it was announced that Toyota Motor Credit, which is Toyota's U.S. lending arm, would be ordered to pay $60 million by the Consumer Financial Protection Bureau, or the CFPB, because of an illegal scheme which essentially made consumers not only borrow but also pay more money, and they didn't give them a real way out to stop these types of payments. And this is just one of a really long-standing history of dealerships and financial arms doing extremely shady activity to get borrowers approved for loans and to get borrowers paying more for those same loans. But before we dive into that, Black Friday is here, and the Car Sharing Masterclass once-yearly Black Friday sale is going on right now. If you're watching this between November 9th and November 30th, 2023, then take action now and use the code BLACKFRIDAY200 to get $200 off your purchase of the Car Sharing Masterclass. This is the biggest sale that we've ever run, and once it's over, it won't be back until next year, November 2024. I've been a Turo host for over 6 years, and I've compounded all my experience and knowledge and squeezed it into 7 hours worth of content for the Car Sharing Masterclass, where I'll show you everything that you need to know about starting a Turo side hustle. Everything from LLCs, how to work with insurance, what type of cars you should buy, where to buy cars, setting up automated communication systems, and even what to do in the case that your car is in an accident, as well as everything in between. We have hundreds of successful students, and I would love for you to be the next one or your money back guaranteed. Click the link down in the description below to steal the deal now. Now, like I mentioned a moment ago, the CFPB has ordered Toyota Motor Credit to pay $60 million in fines due to their shady activity. More specifically, illegal lending and credit reporting. And according to a release by the CFPB directly, Toyota Motor Credit took part in an illegal scheme to prevent borrowers from canceling product bundles that increase their monthly car loan payments. The company withheld refunds or refunded incorrect amounts on the bundled products and knowingly tarnished consumer credit reports with false information. Of the money that Toyota Motor Credit is required to pay, $48 million is going to go to the victims of these crimes, so the harmed consumers that took out these loans or weren't able to get the refund, and $12 million is going to go to a relief fund set up by the CFPB. Now, the headline of what happened here with Toyota Motor Credit is infuriating. I mean, the idea of a large credit provider, in fact, one of the largest in the United States, taking advantage of their customers by intentionally charging consumers more and then requiring them to jump through hoops in order to cancel, that's messed up. But the details of what happened here are actually much, much worse. Because according to the CFPB, Toyota added product bundles to consumer loans that ranged anywhere from $700 to $2,500 per loan. So it was enough to make a pretty substantial difference to Toyota's bottom line, but probably not enough to where a lot of consumers would notice it on their monthly payment. Because $2,500 spread across 84 months or 72 months, it's not a ton of money on that month-by-month basis, but $700 to $2,500 is still a lot of money. But whenever consumers caught wind of these bundles that were applied to their loans, and whenever they contacted Toyota Motor Credit to try to get them canceled, Toyota Motor Credit reportedly directed these consumers to dead-end cancellation hotlines. And according to the CFPB, between 2016 and 2021, Toyota Motor Credit funneled 118,000 customers through the bogus hotlines, which Toyota called the retention hotline. Representatives on the hotline were instructed to keep promoting the products until consumers had verbally requested to cancel 3 times, at which point the representatives were instructed to tell the consumers that if they actually wanted to cancel, they had to submit a written request. And truthfully, this sort of reminds me a lot of what Tesla was found to be doing earlier this year, allegedly. Earlier this year, there was a report that stated that Tesla had a hotline called the Diversion Team, which was designed to purely cancel service requests for Tesla vehicles to specifically address range complaints. Apparently, the entire objective of the department was to prevent people from scheduling service appointments to address these range issues, either by delaying their service appointment out more and more and more to the point where it would never happen, canceling the service appointment, or convincing the consumer that they actually don't need one. And there was basically this whole protocol to prevent these service appointments from happening at all. And allegedly, at this Tesla call center, whenever the diversion team would successfully divert a service appointment for range issues, they would celebrate by banging on a xylophone. And truthfully, whenever I was writing this video, for some reason, I recalled it being a gong, not a xylophone. But truthfully, either way, it seems like something straight out of The Office. Somehow, though, a xylophone is even more strange. But in the case of Toyota, once customers were finally able to cancel, instead of actually giving the consumers their refunds, they instead were applied to a credit to the loan of the car. Or alternatively, they would occasionally give refunds, but they would intentionally refund inaccurate amounts. And according to the CFPB, Toyota Motor Credit falsely reported customers' accounts as delinquent for failure to make monthly account payments, even though customers had already returned the leased vehicles. And the company did not promptly correct the negative information it had sent to these consumer reporting companies, even though Toyota knew it was wrong. And on top of all of this, Toyota failed to maintain proper procedures to ensure that the information being reported to these credit reporting agencies was in fact accurate. And as a result, these consumers were affected by these bogus credit report data. Now, this is an egregious and large-scale example of what dealerships or credit arms will do to get money out of their customers. But it certainly isn't the only example, because according to Automotive News, in a report released earlier this month, a Connecticut man is suing not only his Toyota dealership, but also Toyota Motor Credit for falsifying data to get him approved for a loan, which then resulted in him getting approved for a loan that he really shouldn't have been approved for in the first place, and ultimately this all led to a repossession of this same vehicle, thus leaving the man without a vehicle and a really derogatory mark on his credit report. According to a report, a customer went into a Toyota dealership looking for a RAV4, but based on retirement income and expenses, he didn't qualify. A few months later, he went back, this time getting a Camry, which he believed would be cheaper. And reportedly, Toyota Motor Credit and the dealership stated his income to be about 40% higher than it really was. And they also reported his monthly expenses to be about 65% less. And this resulted in the approval of this Camry, which had a monthly car payment of over $600 per month. On top of all of this, the dealership and Toyota Motor Credit reportedly charged this same customer for $3,000 in add-ons that he didn't consent to. And eventually, this car was repossessed because, of course, the gentleman couldn't afford it. And as a result, this person is now suing his dealership and Toyota Motor Credit. Now, when viewers watch this, some of the responses to this video will inevitably be something along the lines of,
"Well, the guy should have known what he was looking for. It's his fault. He's an adult. He needs to do his due diligence."
But the problem is, this is what dealerships do, or should I say dealerships and financial institutions. Credit arms, especially in the automotive space, as well as dealerships, are predatory. And they don't care what they say on your credit application, because as long as you're approved, you buy the car and they get a fat check, they're good. They don't really care if you repossess because it doesn't affect them. It's gross. And truthfully, dealerships know which people can and cannot navigate the car buying process, and they tend to take advantage of the ones who can't and don't really know or understand what they're doing. Period. The automotive and automotive financing industry is in desperate need of regulation and, quite frankly, a full-fledged overhaul. Because how is it that whenever people buy a house, which is an appreciating asset, people have to jump through hoops in order to be approved? But whenever people buy increasingly more and more expensive cars, which are a depreciating asset and have significantly more risk, they can just go walk into a dealership and buy a car that is well above their means without really any proof of any finances at all. There is not a single legal mortgage here in the United States that was drawn up with falsified records by a mortgage broker, because that would be absolutely unacceptable. But for some reason in the automotive space, this is relatively commonplace. And for Toyota to be the center of this controversy, well, Toyota, I expected more from you. But with that being said, you guys, I hope that you enjoyed this video. Remember that my course, the Car Sharing Masterclass, is on sale until November 30th, which is tomorrow. After the sale is done, you'll have to wait until next year to get the same level of discount. You can use the code BLACKFRIDAY200 to get $200 off. You'll also gain access to our private Discord and our monthly Zoom calls, which the November one is being held tonight, November 29th at 7 p.m. Central. So if you join the course before them, you will gain access to this November Zoom call as well. Again, you can use the code BLACKFRIDAY200 to gain access to the course for a discounted price. Like always, I hope that you enjoyed this video. If you have any questions, comments, if you have anything to add, I would love to hear it, so make sure to leave a comment down below. And while you guys are at it, make sure to hit the like button, hit that subscribe button, and hit that notification bell. And I will see you guys in the next video.